We have discussed about financial reporting, stakeholders. Then we have discussed about components of financial reporting. In today's lecture, we will be discussing about GAAP, that what actually is GAAP and why it is important for every company to follow GAAP. So the full form of GAAP is Generally Accepted Accounting Principles. Now, what is the meaning of generally accepted accounting principles or accounting standards? The another name of GAAP is accounting standards. So these accounting standards or GAAP are rules and regulations which are prepared by accounting bodies, and these accounting bodies are governed by government. You might be thinking that what I'm trying to explain you. So I will explain you this concept with the help of Excel, and then we will see the annual report of some companies. So we know that what company do? Company communicate their financial information to the stakeholders with the help of financial statements. So every company, they prepare their P&L account, they prepare their balance sheet, also they prepare cash flow statement, and similarly they prepare other statements, right? So right now I won't be discussing about other statement. So what company do? When company prepare their P&L account, in top they record their revenue, right? After that they record their expenses. Then when company prepare the balance sheet, in top they record their assets. So assets include current asset and non-current asset. After that, company record their share capital amount. Then company record their liability. In liability, company show current liability and non-current liability. This is how company prepare their balance sheet. If I talk about cash flow statement, so company show three activities. So I won't be discussing about cash flow statement, right? I just have to give you an idea about generally accepted accounting principle meaning. So if you see what company do, when company prepare their balance sheet, so every company, they follow this format, right? Every company, they follow this format. They first show assets, then they show liabilities. If I talk P&L account, company first recognize revenue, and after that they record expense in their books of accounts. Now you can see the consistency, that how every time company prepare similar, every time company follow similar format. So this format has been given by Companies Act. This format has been given by Companies Act, and the name of this format is Schedule 3. So first I have told you about format. If further I discuss, so in balance sheet, what we do, in asset we recognize fixed asset, or you can say property, plant and equipment, right? So how you will find out the amount of this fixed asset? So there is a specific law, right? There is a specific law. You want to find out the amount. So what you have to do, you have to follow the process. And what is that process? I will give you example here. So if you see, let's suppose what I'm doing, I'm buying one machinery from Mumbai. I will give you full-fledged example. Here, what I'm doing, I'm buying one machinery from Mumbai. And right now I'm located in Pune. Now, if you see, the cost of machinery which I'm purchasing from Mumbai is 1 lakh rupees, right? And what I have done, I have also paid GST for this purchase. So let's suppose I have paid GST of rupees 18,000. Not only if I'm buying machinery from Mumbai, so I have to incur some transportation charges also, right? I will hire one truck, and I will keep this machinery in this truck, and I will pay some transportation charges. So let's suppose I'm paying transportation charges, that is 12,000 rupees. After that, once this machinery will reach to Pune, so what I will do, I will incur some installation expenses also, right? So let's suppose I'm paying installation expenses of rupees 20,000, right? Now, what amount I should show in balance sheet? So here we know that whatever amount is incurred till installation of machinery, that amount we capitalize in balance sheet. So here, if you see what amount is incurred till installation, so here cost is the amount which is incurred, GST or transportation charges and installation charges. So what I will do, I will sum up these values, and the final amount after summing up these values, that's going to be shown in balance sheet. So if you see 1,18,000 plus 12,000, it will be 1,80,000 and 1,50,000. So in non-current asset, what I will do, I will show 1,50,000 asset value, right? Now, if you see here, After installation, if I'm incurring some other expenses, after installation, I'm incurring some other expenses. Suppose I have paid repair and maintenance expenses of rupees 10,000. Now, whether I have to capitalize this cost or I will be transferring this amount in P&L account. Definitely, you will say that we should transfer this amount in P&L account. So from where you are getting this information that this particular amount is to be transferred in P&L account and this particular amount is to be capitalized. So these informations are given in generally accepted accounting principle, or you can say accounting standards. So every company who are working in India, so what they have to do, they have to follow accounting standards when they are preparing their financial statement. Now you might be thinking that what number of accounting standards are there in India? So generally there are 40 accounting standards. There are 40 accounting standards which provide detail for every transaction, right? So if you want to record revenue in your books of accounts, so there is a specific account standard, that is Ind AS 150, which talks about revenue recognition, how you will recognize the revenue in your books of accounts, right? Generally, we follow two concepts. One is accrual concept and second one is cash concept, right? In accrual concept, what we do, even though if we are performing cash or credit sale, in both cases, what we will do, we will recognize the revenue in accounts. So let's suppose I have performed cash sale of rupees 20 crore and credit sale of rupees 80 crore. So in this case, I won't be receiving cash. In case of credit sale, I won't be receiving cash. But still, what you can do, you can recognize the revenue of rupees 100 crore in your P&L account, right? In case of cash accounting, if your cash sale is how much? 20 crore and your credit is 80 crore. So in this case, you will be able to recognize only revenue of 20 crore rupees. But if I talk about companies like Amazon, right? What you are doing, or about Amazon, what they do, they provide cashback, right? They provide you cashback and they provide many of benefit to their customers, right? Now, how they will be doing the accounting? Their accounting is much less, right? So if you want to do the accounting of company like Amazon, Flipkart, or some banking companies, right? If you see nowadays, transactions are very complex for banking companies also, right? What they do, they provide you cashback, they provide you bonus points, they provide you several benefits, right? So how you will do the accounting? So you want to do the accounting of those type of entities, so you have to read these accountings, and after that you will be able to do the accounting, right? If you want to recognize the revenue, so definitely you to check the 5-step model, right? And that model we will be discussing in detail in coming session, right? What is 5-step model? Now if I talk about property, plant and equipment, so there is a specific accounting standard, that is Ind AS 16. So Ind AS 16 provide detailed process or description that how you will recognize asset in your balance sheet, right? When you will de-recognize the asset in your balance sheet, how you will value the asset in your balance sheet. These details are given in account standard, right? There is another accounting standard which talks about investments. So what you are doing, that is financial instrument. Here, number is Ind AS 32, 107 and 10, right? So this is standard provide details about financial instrument, right? So if you're investing in shares of another company, so how you will do the accounting? So these things are given in these standards, right? So we will discuss about these standards in the coming sessions. Now I will show you the annual report. Here see, so what company do? Company, they recognize revenue in their books of accounts. So I have told you what every company has to do. They have to follow the Schedule 3 format. Now, what is Schedule 3 format? This Schedule 3 format is given by Companies Act, right? So generally it has, it's a format, right? Here, if you see what company is doing, first company is showing asset, then company is showing non-current asset, then company is showing current asset, then company shows equity and liability, then liabilities, then current liabilities and non-current liabilities. So they have to follow this format. This is provided by Companies Act 2013. So to provide consistency, that is the reason what government has done. They have created one body which will be introducing accounting standard, and they will be providing you the format also. So for this session, it is enough here. Thank you.